So I'm back again. Yeah. As I was mentioning, like there are various things that we need to look at while we are, looking for what price we should enter into. So, one of the very important aspect is the PE ratio. But PE ratio, in case of in crypto markets, might not be the right kind of a tool to determine whether the price of any crypto is undervalued or overvalued. So the instead of PE ratio, the next thing that we can look into is the network value to transaction. So NVT is something that we can look into. So it's nothing but NVT is like market capitalization by daily transaction volume. In USDT terms is what we are supposed to be determining our whether the price is overvalued, undervalued, or fairly valued. So, third thing which I was reiterating and which I was talking about is the 200-day moving average, which is very important. So, today's topic we are discussing what is the right price at which you should be entering into the market. While there are so many various reasons, various ways through which you can enter into crypto, the right price is what matters a lot. So probably at that time frame on the chart, it might be showing you oversold or overbought conditions, and that's when you look into it and then you determine that okay, it might be the right time for me to enter into the market, looking at oversold oversold zone. But sometimes that time frame is not good enough for us to determine whether that is the right opportunity or not. So what we need to do is we need to first find out the NVT, which is the network value to transaction ratio, which is very important. Then comes the 200-day moving average, which is very important in order to determine. And then we also have to see the relative valuation of it, compare it with the competitors, and also look for sentiment and narrative indicators, and also the tokenomics check, which is very important again. And other than all of these, if there is something left which we also have to understand, is that there are macroeconomic and regulatory context also which we need to determine. So if in a bull market, even an overvalued token or coin will pump hard. So you have to understand this also. And in a bear market, even undervalued coins can struggle. So fair value is not immediate price movement. It is timing and cycle awareness also, which matters a lot while you are actually determining what price you should enter into while you are trading. So it's a very important thing that we need to understand. Sometimes these factors are not the only reason because of which you should be entering into the market, because there are so many other things as well which matters behind the scene, and it is very important for us to analyze all of them too. So this is what it is, and this is how you should also get into any crypto. Okay. This stands for stocks. Okay. So, other than all these factors which are very important for us to consider, if there is something which you don't understand and which you're barely understanding, the easiest way is to see that you can actually enter into the market when the fear and greed index is like completely into fear. So those are also very, very good opportunities. It's not just about mathematical calculations, it's not just about logical reasonings or things like that. Like some of the things might not be any calculations, also, they might only be just some logical things that we need to understand, that we have to basically enter into the market at times where we basically can make the most of it. So whenever you see on the fear and greed index too, if it's under fear, so that is where your opportunity lies. So there is it's nothing rocket science, I would say. It's a simple logic, it's a simple understanding. While the calculations can be something that you can look into, definitely calculations are there for the reason. But other than the calculations, what we need to understand is that the fear and greed index, if they stand at fear, that is also a buying opportunity for all of us. So we have to make sure that whenever we are buying, we have ample opportunity to buy. We have right reasons to buy. We have right, like positions to buy, and we are not entering when the market is already 10x, or when the price of that particular crypto is already 10x. That's not where we buy. So very, very important things that you always have to remember is, like, you have to do your own research, irrespective of who you take it as mentor, who you take it as a guide, who you take it as your teacher or whatever. It's very important you do your own research before you get into any crypto out there. So it is very, very essential and very, very important. And also not relying on totally on hype or influencers. It is very important that you're not just going by somebody telling you to do something. So while all these things which we talked about, all these things which are there on the screen right now for you guys, it's very important. Other than that, what we also need to know is that we have to know the project's white paper, which is very important. The roadmap of that project is very important. The founder's background is very important. The use case and the real world utility, tokenomics, supply capitalization, investing, inflation, everything that we have to know is very, very important when you're getting into any kind of project. So be it a meme coin, be it a real-time project, whatever you're getting into, some love meme coins, and I totally understand your love and support towards it, and I'm not here to support something or disregard something. I am in favor of everything and anything, as far as you understand that. It's very important, because if you have slight problem also in understanding it, it's better you don't get into any of it. That is what my understanding about all of this is. So this is something that you need to obviously understand and get into in case you are wishing to start your crypto journey. So now, next very important thing is, as I always tell in all my streams, and I've been telling past 5-6 months always, that only invest what you think you can afford to lose, because investing into crypto means you can lose out on everything as well. It's not necessary that you're always going to make money. You can lose out on everything. So it is very much possible. And because crypto is highly volatile, and they don't use rent money or emergency savings, it's sorry, I'm extremely sorry what I said. What I mean to say is, if in case you have some emergency funds, like for food, rent, the basic expenses of your life, better not put those money into crypto, because it's so volatile. In a day, you can see up to 30-40% up and down of the crypto, and that is what it can lead to. Suppose that is the only money you have and you're putting it into crypto, you might lose out on everything. So please don't use your rent money, food money, emergency savings that you have. Better use money which is totally not for anything else but this. So this is what you will be getting into. So start small, scale it with experience. Don't just go with the hype, don't go with greed, don't go with hype, don't go with influencers, don't go with people telling you to do something. Do your own research, find out the right price, do your bit of math, your calculations and everything. Then you decide what you need to decide. And I have given you ample videos, streaming and information. Where is the buying opportunity lying? Where is how do you buy it is what I have given you ample information. So for the crypto lovers, we have different metrics that we need to look into while you are buying it. So it is very important you look into those metrics, those tools which are very important. And other than that, there are some non-mathematical or non-logical things as well which you need to look into before you get into starting your crypto journey. Now, other tip, trick, or say whatever piece of information that you need to know is, you also have to store your crypto assets very, very safely. Okay, and when I say this, it means that you need to use some cold wallets like Ledger or Trezor for long-term holding. So if in case you think holding the crypto in the exchange might be a point of worry for you, you also have to use cold wallets to be able to save them securely. Avoid keeping large amounts on exchanges, because if you keep the money on exchanges, chances are you might be if you don't withdraw it on time, or you're not taking right kind of right kind of action on time, because so many hacks, so many things happen on these platforms. Some are centralized exchanges, some are decentralized. Centralized you might be safer, but decentralized you might have some certain problems out there. So it's very, very difficult to retrieve your money in those phases, in those difficult situations. So be careful. Avoid to keep such large amounts on the exchanges. Enable 2FA and never share seed phrases. I think enabling 2FA is very very important, and basically we should never ever share the seed phrases too, which is very very important. So I think that is what matters. Just a sec. Okay, guys. So we'll be talking much more on this front, and we will be, determining how what all the other aspects of it is very important in order to get into the crypto journey that we are starting. So we will touch base upon all of that. Just give me a couple of minutes, and I will be back after a small short break. So before going on to the break, I was talking about what are the other measures other than, other than knowing the P ratio or the net network value to transaction ratio or 200-day, moving average and all of that is like, about doing the research, investing only what you can afford to lose, knowing about the total value logged in all the protocols. Like these are few things. Other than that, um, then we also have to know, um, basically the macroeconomic and the regulatory context of it, timing, cycle awareness, tokenomics checks, sentiments and narrative indicators. All these important things are very, very important when you are actually entering into the crypto market. So that is what is required. Now coming to, other than that, also understanding the market cycles, like I was telling you, even though probably at that point in time, basically, you might see in the time frames, as I was telling you, like maybe in 1 minute, 2 minutes, 5 minutes, three minutes, or in different time frames, you might be seeing that it's in oversold territory or things like that. But sometimes what happens is it might not be the right opportunity still, because the price might still be at an overvalued condition. And how are we determining that overvalued condition is what we have discussed on this particular thing here. Now other than that, doing the research, finding the tokenomics, finding the co-founders, investing in the real use case, real world utility tokenomics, investing what you can afford to lose, storing the crypto into cold wallets, enabling the 2FA and never sharing the seed phrases. Things like that are very, very, very other aspects of it, very important aspects to it. So this is also some of the things that you need to see. So now coming to understanding the market cycles. Don't buy the top during hype, so which is very, very essential, which is very, very important, that you should never buy during the during top hype. Whenever it is in the hype, you should never buy it. Best entries often come when fear and greed index basically shows extreme fear. Watch for corrections and dips to enter. So you have to see when the dips are happening, and then that is when you will enter. So that is how it is. So yeah. So other than that, there is something that we also have to see is about diversifying the portfolio. So don't go all in one coin. You can spread across different, sectors, like in some of the blue chip kind of cryptos, which we talk about, are BTC, ETH, which are stable currencies, stable projects that you can get into. Then you can divide it into different sectors, maybe the layer ones, DeFi's, AI, gaming, combination of all of them. You can have that also. Diversifying the portfolio means that. Then stable coins for flexibility. These are, some things that you need to remember while you are actually getting into this crypto, not putting all the money into that itself. So now checking the key metrics. So market cap, not just price. TVL for DeFi projects. TVL, like I said, total value logged in the protocols for DeFi projects. You need to check the key metrics, whether that particular crypto which is logged, is having good market capitalization, like assets under management. TVL is nothing but assets under management, right? So what is the TVL of that project. Those are some things that we need to understand. Then there is also something called volume, which you need to check. Then liquidity is one thing which is very important. So how easy or difficult it is for you to get out of that project. Is it like people are trading too much into it or not trading into it at all? If there's no demand, there's no, lot of buyers or sellers, then the liquidity might be very low in that project. So you have to see if the liquidity is good enough, the buyers and sellers are good enough over there. Then the exchange listings. So if that particular project is getting listed on various platforms, then it is very good, that it is essential that you kind of get into those kind of projects where the exchange listings, the more it has, the more opportunity it will have to kind of grow and to kind of have that liquidity, to have that what can I say? It will have more demand. It will have everything that you need. So that is what also matters. So these are some key metrics that you need to remember. Developer activities like checking the GitHub or token terminal to make sure that are there any upcoming developer activities, anything that it is going to go through. So much of information that you need to keep aware of yourself. Like you have to keep yourself aware. Be aware of regulations. I'm also going to So this is also one of the very important things, like we need to also see the information here. So SUI eyes, like for example, this news that you see, it's very important to see all these informations too. Not just check the metrics, not just market capitalization, not just TVL, not just volume, not liquidity, but also such kind of news, which is very important. So be aware of the regulations. Some tokens are securities or unregistered offerings. Avoid tokens not allowed in your countries. Stay updated with laws, especially for taxes. What is the implication of tax? How are you going to get taxed on it? Or other than that, very important thing is whether that particular crypto is available in your country or not, whether that exchange that you're using is available in your country or not. So many important factors which are very, very crucial. So that are very, very crucial, not just about when to enter, when to exit, not just that, but so many other things which are very, very crucial when you get into this. And if you miss out on any of these, the chances are, or the option, or the thing is that basically you will end up making losses in case you are not aware of such kind of things. Probably if you were not updated with laws, especially for taxes, or you were not sure whether it was allowed into your country or not, things like that, you miss out, then you might have the chance to miss out on the right opportunity out there. So and even if not about the opportunity, but you will have a lot to stake there, because you missed out on an opportunity of knowing that fact, and then you will end up paying either heavy losses or taxes, or your calculations might not fit in the right direction and things like that. So those are some things that you need to remember. So yeah. You have now moving on. Other than this, what also you need to remember is to have an exit plan, okay, which is very, very important. I'll come to that news a little bit later, because I do want to have a look at it, but then Or maybe I'll open another tab. Let that be there. Yeah, this one is. Yeah. So knowing your profit targets or when to take gains, when to exit, when to enter the market is also very, very crucial in order to understand that you enter the market at the right time and exit at the right time. So if you miss out on that opportunity for that period, like for that little second or little minute also, you will tend to lose out on a lot. So consider stop losses for downside protection. Better to have stop losses like maybe at 0.5 1% also. It's better to take the loss and just exit the market in case you think the market is going to go further down. You're not sure of the positions, you're not sure of what prices you've entered into and all of that. Then better to take a stop loss at like 0.5 1% and then just get out of it. That is how you should be. Other than that, avoid diamond hands mentality when it's irrational. Don't get into the greed zone, like when, especially if you're not too aware. Better to take little profit and get out of it rather than getting into the greed and getting your money stuck forever, or getting your money stuck here and there. So also watch for the red flags, which is very important. Promises of guaranteed returns, anonymous like development teams, especially with no track records, that can be a very, very wrong impression. Like if you don't have ample information about the developers team or things like that, then that can be a very wrong decision, because you might fall victim to a scam or something. That is very much possible. And in crypto markets, scams are very, very basically very easy, and because of lack of knowledge or very little knowledge, you might be facing too much of problem because of all these things. So you have to be like very careful. So also another very important factor is that sudden price spikes with no news. This is very, very crucial. If in case you hear the price is surging very high, price going very down, those are very, very crucial things that you need to remember. And if certain things like these are happening, then you might as well not want to get into it at all. So this is what it means to know for the red flags. You have to also know the red flags while you are entering into the crypto markets. Then low liquidity or scammy tokenomics, those are some things that also you need to be very diligent about, because what happens is, in case of low liquidity, if there are no enough buyers or sellers, then you might get your money stuck into something, and it's not practically possible and all of that. So that becomes a bit difficult. So then there is following the reliable resources like CoinDesk, Mizari, DeFi Llama, Crypto Twitters, and all of that. It's very important to stay informed what's happening in the community, what the people are talking about. Is it a good project? If the tokenomics is looking good enough, or if it's basically looking some kind of scam and things like that. So it's a bit difficult. So join the community forums for all the information. We on the Zbit platform also have our own Telegram community where we keep you updated about everything that's going on in the market and in the crypto world as well as across. So you can join those communities and all of that. You have to be skeptical of whatever is happening. You have to be updated of everything, but these are majorly what you need to know. So So, in relation to this, there is something that I actually wanted to play it for you guys and, maybe take you through some scams or things like that. So, I do remember of a scam that I'm talking about. It's called the Squid Game. It's a very interesting, scam in the history, which I wanted to share with you guys and probably might help you guys in making the right kind of decision. So let's just play this and
Here's how I got my team to use Monday Sales CRM and actually like it. Let me start by saying it's so easy to use that I won them over right away. Onboarding was seamless, and now every little detail of our pipeline is in one place. Whether it's legal or sales, everyone can find the smallest details within a few seconds. From changing a status to sending an AI-generated mass email, everything is quick.
This time there has been news about a new crypto called Squid Game, and it's quickly turned into a multi-million-dollar scam. In this video, we are going to explain what the Squid Game crypto is, the reasons for its rapid growth, and how the Squid Game's crypto scam worked. Hey everybody, it's Acho6. This channel's focus is to bring you up to speed on topics of the cryptocurrency world, by making it easier for you to understand the information presented in the videos. This will be done through analogies, stories, and examples. So, what is the Squid Game crypto? Well, the Squid Game is a cryptocurrency token like Polkadot, Cardano, and Solana, but it isn't a meme crypto. Inspired by the hugely popular South Korean Netflix series Squid Game. In this currency called Squid, people can earn tokens by playing online games or play to earn cryptocurrency, which can be exchanged for other cryptocurrencies or national currencies. According to the Squid Project's white paper, the game was offered as a way to play an upcoming online game based on the series. Is it related to the South Korean Netflix series? Maybe you've been wondering whether the Netflix series is involved with this new crypto. The answer is no. The South Korean show is in no way associated with or affiliated with Squid Game crypto. The crypto shows that the Netflix series has a big influence in the coin, even if it isn't involved. The price of Squid Game coin surged in the last few days after its launch in late October. According to CoinMarketCap data, the token skyrocketed in price from about 0.01 on October 26 to around $38 on October 31st. The price then rose to about $90 early November 1st, then spiked to above $2,861 before falling to 0.0034. All this in the same day, Monday, November 1st. The scam. It seems that the cryptocurrency inspired by the Netflix series has turned out to be a scam, with its developers reportedly making off with more than $3 million. This is a gigantic red flag. The big problem here is people buying into something too quickly that they don't understand. People only saw that it was connected to Squid Game. I watched that show, and I think it's cool. They said it was a play to get tokens. It's a hot new concept where you play a game, and the more you play, the more tokens you earn. Unfortunately, there was no real game to play except that you put in your money and buy the token. Then you can't withdraw your money. Recent reports from buyers show they cannot sell their Squid tokens and cash out their gains in the only available venue, PancakeSwap. The website of the project before disappearing was full of typos, which was another red flag. The Twitter account for the project, which had gained 57,000 followers, did not allow replies and then was blocked due to unusual activity. There was no information about the founding members. All the founders are not on LinkedIn. There were also fake comments in support of it from Elon Musk. The fact that the chart never fell, instead constantly rising, was another clue. This is not the first time scammers have tried to take advantage of popular TV shows. There was a cryptocurrency called Mando, created in April based on Disney's The Mandalorian. which turned out to be a scam. On the Binance Smart Chain, it was an attractive token, but people quickly realized that it was a classic rug pull. We have plenty of rug pulls in our industry. More than 40,000 investors kept their tokens after the crash, but investors appear to have lost all hope of getting their money back. My advice to people would be, maybe you shouldn't invest a lot of money in a token tied to a TV show that didn't exist 2 weeks ago. In the crypto world before buying, investors should read document releases, check technical information and crypto white papers, while understanding the associated risk with crypto projects. Subscribe and turn on notifications so you don't miss more videos helping you invest in crypto.
Imagine waking up to find your investment vanished overnight. That's exactly what happens in a rug pull scam. Today I will break down what it is, how it works, and most importantly, how to avoid becoming a victim of this scam. Hello guys, I am Maestro and welcome to my empire, your go-to service for crypto tips and safety. If you are new here, don't forget to subscribe so you will never miss important updates. Let's dive into our today's topic, which is rug pull, one of the most common and devastating scams in crypto. Now in this video, this is what you are going to learn. Explanation of the rug pull scam, a real life experience, and how to identify a rug pull scam and also how to avoid it. Now we'll be starting with the explanation of a rug pull scam. The rug pull scam happens when developers create a fake crypto project, hype it up to attract investors, and then vanish with all the funds. It's like pulling the rug out from under you, hence the name rug pull. Now let me quickly break it down for you, and this is how it works also. Firstly, the developers create a new token or project. Secondly, they market it aggressively on social media, often with promises of high returns. Thirdly, investors rush in and the token's value skyrocket. Then fourthly, the developers sell their holdings. This is otherwise known as pump and dump, or they lock investors out of the liquidity pool, making the token worthless. Now guys, we'll be sharing a real life example. The Squid Game token scam is a notorious example of a crypto fraud that exploited the popularity of the hit Netflix series Squid Game. In late 2021, developers launched a cryptocurrency called Squid, marketed as a play to earn tool inspired by the series. The token attracted significant attention due to its association with the show, which was immensely popular at the time. Investors were lured in by promises of high returns and an interactive online game that would require the token to play. The token price skyrocketed within days, climbing to an all-time high of $2,861 per token. However, red flags emerged earlier on. The project white paper was riddled with grammatical errors, and investors quickly realized that they couldn't sell their tokens due to a suspicious anti-sell mechanism in the smart contract. On November 1st, 2021, developers abruptly pulled the rug on the project. They withdrew approximately $3.38 million worth of the funds and disappeared, leaving investors with worthless tokens. The price of Squid plummeted to nearly zero in minutes. The BBC News covered the incident, highlighting the lack of due diligence by investors and developers' use of viral pop culture phenomena to create artificial hype. The scam served as a cautioning tale about the dangers of investing in unverified projects and need for thorough research. It remains a stark reminder of the vulnerability in the cryptocurrency market. Okay guys, this is all about the real life example of a rug pull scam. Alright, now the next thing we're talking about is the types of rug pull. Firstly, we have the soft rug pull. Here, developers slowly withdraw funds over time, leaving the project to die. Now, secondly, is the hard rug pull. Here, developers abandon the project, suddenly taking all the funds and then running away with it. Now, we're going to talk about how to spot a rug pull. Remember, this is a very essential part of this video, so you need to pay a very close attention. So the first one is anonymous developers. If you can't find the team that is running the particular project or the developer, that is a red flag. Secondly, no audits. Legit projects undergo security audits. If you wish to know about the project or how you can get an audit, just click on this video description. It's going to help you on how you're going to know if a project has undergone an audit. Thirdly is locked liquidity. If liquidity isn't locked, developers can withdraw the funds anytime. So if you wish to know if a project is locked, also click on this video description. I've made a video on that. You can watch how to check if a project's liquidity is locked. Now the fourth one is hype without substance. Now you need to be very wary of projects with unrealistic promises but no clear roadmap or utility. Now I'll be sharing a pro tips to stay safe from crypto rug pull scam. Firstly, research thoroughly before investing. Very important. Be sure that you research the token before investing. Secondly, avoid projects with a lot of hype but little transparency. Okay. And thirdly, use trusted platforms like CoinGecko or CoinMarketCap to check your projects. Now I'll be showing you, or I'll be making a video on how you're going to use a CoinGecko or CoinMarketCap to research your project. So just ensure that you hit the like button and subscribe so that once I drop the video, you are going to know that. But if you are just watching this video lately or the date has been long, you can also click on this video description. I might have dropped the video there. You can just go ahead and watch it. And the last but not the least is never invest more than you can afford to lose. Okay, this is all about today's video. And then guys, have you ever been a victim of a rug pull scam? You can always share your experience in the comment below to help others to avoid this.
A digital token based on the popular South Korean Netflix comedy Squid Game has lost nearly all of its value after being discovered to be a hoax. Squid, which billed itself as a play-to-earn cryptocurrency, had its price skyrocket shortly after its inception, increasing by thousands of %. But all this turns out to be a rug pull. Disclaimer, I'm not a financial advisor. The video is for informational and educational purposes only. Hey everyone, welcome to Crypto Trends. In today's video, we'll talk about Squid Game crypto scam. So make sure to subscribe to the channel so you don't miss out on any of our videos. So without further ado, let's get into it. The Squid Game crypto scam explained. While many players in South Korea's fictional Squid Game series died quickly, things did not go so smoothly for investors in a cryptocurrency inspired by the global craze. In October 2021, an unidentified developer released a cryptocurrency token based on the immensely popular Netflix show about a dangerous game in which players risk their lives to dig themselves out of tremendous financial distress. The digital currency, known as Squid, began trading on the PancakeSwap platform on October 26 at a cent per token, according to cryptocurrency pricing website CoinMarketCap. According to CoinMarketCap data, the price had risen to $2,861 by November 1st. CoinMarketCap issued a warning to investors not long after the Squid currency reached the market, indicating that something was wrong. According to CoinMarketCap, someone had taken down the Squid Coin website, and cryptocurrency promoters could no longer be reached. We have received multiple reports that the website and socials are no longer functional, and users are not able to sell this token in PancakeSwap, CoinMarketCap said on its website. There is growing evidence that this project has been rugged. Please do your own due diligence and exercise extreme caution. More than 43,000 investors purchased the Squid currency, and blockchain specialists fear they have fallen victim to a rug pull fraud, in which developers abandon the digital currency after large sums of money have been invested in it. According to a survey from cryptocurrency intelligence firm CipherTrace, the prevalent crypto scam cost investors $113 million between January and July. According to Gizmodo, the creators of the Squid token likely made off with around $3.3 million. Tale as old as time. It's a tale as old as time, Dean Richardson told CBS Money Watch. Do your own research. Go to the website.
verify that the team is real people. The Squid Money founders capitalized on a current period in which the Korean survival program has become a significant popularity, and investors, notably millennial and Gen Z savers, expect to see high returns in a short period of time, according to Richardson. However, he believes that individuals should have anticipated the swindle. One dead giveaway, the SquidCoin website informed investors that their funds would be protected by anti-dump technology. If your money has to be locked up, that made it pretty clear it was a scam, Richardson added. On November 2nd, PancakeSwap did not respond to requests for comment. The Squid offering a rug pull scam has been officially identified by the site. Many of this year's largest financial losses have been caused by digital currency scams. According to the Federal Trade Commission, scammers are coming up with new techniques to dupe individuals into making bogus cryptocurrency investments. One such hoax provides cryptocurrency investment advice online before redirecting users to fake websites. In another case, scammers act as celebrities, such as billionaire Elon Musk, to dupe people into transferring them cryptocurrency by saying the celebrity will contribute to their investment. Final takeaway. This video has a takeaway. Always be cautious while trading crypto. We all know that investors are getting more cautious, but scammers are also experimenting with new ways to steal your hard-earned money. So, before investing in any crypto project, do your homework. You can validate a project by looking at its team. Are they available on social media, notably LinkedIn? Do they post frequently? Is there any customer support? And so on. All of this could aid you in your quest for the ideal investment. So, what are your thoughts about the Squid Game crypto scam? Were you among the 43,000 investors? Please let us know your thoughts in the comment section down below. With that,
So you see how easy it was to kind of, to fool around and to basically take the money away. So whenever I'm actually emphasizing on any of these things, I'm just trying to focus on a very, very crucial and important things which you guys, I don't know if you understand or you don't, or what, you think about it. There are ways through which you can stay safe. There are ways through which you can safeguard yourself. Of course, there is like where there is such kind of thing involved. While the people might try to fool you, how diligent are you is what matters as well. So how do you safeguard yourself is by knowing everything about that project. If something is looking off-putting in any case, in any way, then you don't have to get into it. So projects which have already stabilized or are stabilizing, those are the things that you should get into. If there is something new coming up, there's no harm in getting into it, but make sure the diligence is done in order to identify whether you're getting into a right kind of project or you're getting into a scam, which is very, very crucial to understand. So this is why I keep telling that you guys have to follow certain protocols, certain things to, get into, like not just about entering or exiting the market at the right time, determining the prices right, logically, or, things like that. But other than that, there are so many aspects to it, both logically, non-logically, or mathematically or non-mathematically. There are so many things that you need to remember so that you get into the right kind of project and don't miss out on the red flags that basically are part of such kind of things. So the reason I showed you this scam is because this was a very historical event that has happened, and within couple of days just the price shooted like almost 31,000%, 3,100%, something like that. It was like crazy shit, like 3.3 million was stolen in under that scam. So these are some very, very crucial things that we all as investors, as traders, need to remember, so that when we are getting into any of these things, we don't miss out on any important aspect to it. So yeah, this is what I want to say to all you guys. So please, first and foremost thing, do your own research. Don't go by the hype, don't go by the influencers. That is what first thing is. Second thing is, Even though there are so many things that you need to look at while you are investing into crypto, um, obviously the very important thing is not just about money, not just about the mathematical calculations or things like that. There are non money matters too that we need to look into before we get into any of these projects. So it's very, very important, very essential. So I think what matters here is, first of all, first and foremost thing is getting into the information about the who the developers are. If the developers behind the project are reputable people or somebody who has done some projects before and they are having good market reputation, then those projects are safe enough for us to enter. Otherwise it's a bit difficult to say whether that project is going to stay, not going to stay, what is going to happen with it. We can't guarantee anything of it. So that is very, very crucial. So, yeah. And then I was also talking about portfolio diversification. How should your portfolio be diversified? So you can have a combination of everything into the crypto allocation. So it can be a combination of low risk, high risk, medium risk, and stable coins and all of that. So what allocation you can give is depends on you totally. First of all, it's subjective to every individual, because while some might be okay to take high risk, while some might not be okay to take high risk, but on an average, if we talk about, we can think of having a low risk of around 30 to 50%, where Bitcoin and Ethereum in that case can be considered, because they are of low risk. So in that case, Bitcoin and Ethereum can be considered. In the mid-risk category, you can allocate up to 30 to 40%. So in this, you can have layer ones like Solana, AVAX, DeFi like Aave, Uniswap. All of these can be considered in mid-risk kind of cryptos. Whereas in high risk, if I talk about, the allocation can be between 10 to 20%. And in these things, basically micro caps or meme coins or new projects can be part of it. So these are few things. Other than that, in stable coins, the allocation can be 10 to 20%, USDT, USDC, DAI. These are few things which you can give you some good amount of return. So these kind of stable coins can be allocated to. So remember this, it's an example, not necessarily it may be applicable to you, because you might have different risk appetite, you might have different way of looking at it and all of that. That is very much possible. And also the allocation can as well differ from from person to person, from age to age. Some people who are very young, who is just starting out in this particular industry or starting out their careers, they might be very high risk prone people. So not necessary that what I'm saying, the allocation might suit to you or might not, it all depends. So somebody who is aged above 45 or 50 might have low risk appetite, things like that also matter. So I'm just giving an overall picture, but this can be changed based on your risk appetite. So low risk can be anything between 30 to 50%. Mid risk can be anywhere between 30 to 40%. High risk can be anything between 10 to 20%. Stable coins can be anything between 10 to 20%. But you can change this based on market conditions, your risk tolerance, your age, and whatnot, or maybe even the goals that you have for yourself. So it all depends on those things, and that is how you decide. Now coming to the portfolio allocation, that can also still be based on sector wise also. So To avoid any exposure to just one trend, you can keep it a combination of everything, like maybe layer one blockchains, like maybe BTC, ETH, Solana, AVAX, Near. These can be, you know, part of your portfolio. Or if you want to go for layer two and scaling, then you can go for ARB, OP, Matic, and all of that. And coming to decentralized finance, you can have Aave, Uni, CRV, MKR, and all of that. That can also be part of your your portfolio. Then we have NFT, metaverse, in which, you know, Mana, Sand, AXS, all these kind of projects can also be considered. And in AI and RWA, which is real world assets narrative plays, FET, RNDR, ONDO. So sector wise also you can divide. Portfolio allocation can also be, depending on risk appetite, and also by sector wise, like I said, layer 1, layer 2, DeFi, NFTs, metaverse, AI, RWA, meme coins, and things like that. Other than that, the allocation can also be by use case and utility. So if we are talking about use case and utility, it means the store of value is something which is very important. So if you're looking for store of value, then BTC is the best option. If you're looking for some smart contracts, then smart contracts, ETH, which is Ethereum or Solana, is the best option. Coming to the decentralized exchanges, then maybe, Uniswap or DYDX can be the option. And if you're talking about oracles, then Link is one of the options. Privacy, XMR or ZEC is the option. Stable yields, STETH, RWA token. So guys, whatever I'm talking about, these are just options, and I'm just educating, I'm just giving information. These are not some kind of financial advisors. Even though I'm taking some names here, I'm giving examples or things like that. You might, after hearing it out, you might have to go and do your own research to make sure that whatever I'm saying, you validate it with the right kind of information, and then you choose to get or not get into it. It's totally up to you. Not necessarily what I'm saying you have to go and do that is, not what I'm trying to, basically preach here. So other than that, you need to revisit your allocations monthly or quarterly to make sure that what is happening with your portfolio. Like if it is pumping up, if it is pumping down, or even if it's time to exit by taking the loss, you can exit, because you are, what's happening out there is you're missing out on the opportunity cost out there. So if in case you have locked down your money in any crypto, and you do not know, by investing you could have actually made some great amount of money somewhere else, but you have actually locked your money elsewhere. So you need to revisit the portfolio to also make sure that you are exiting at the right time to gain that opportunity cost that you can get actually. So those are few things that we need to remember while allocating your portfolio as well. Other than that, the common mistakes which we need to avoid is like overexposing to the one sector, maybe just decentralized finance or meme coins or things like that, or just chasing the pumps instead of following a strategy, just looking at what is being hyped about, you're just going by that. That is also a wrong strategy. And holding illiquid or obscure tokens with no exit. So if you find something where you got stuck with money and you're not getting any exit point, then you might have to revisit your portfolio to make sure that you're not getting into any of that. So ignoring stable coins or yield opportunities. So don't get into something which basically is locking your money for longer time. And even if you're locking it, how long can you lock it is what you need to see. So if you're missing out on the opportunity, better to remove the money and then just get over with it, and then reallocate it to get the opportunity cost, to get the benefit of the opportunity cost that you can get. Otherwise your money is going to get stuck forever, and then it's never going to come out, and it will be very, very difficult for you to make money elsewhere. So these are few things that you need to remember. And that is how you allocate it. So combination of everything. Use cases are important, sectors are important, layer 1, layer 2, metaverse, NFTs, RWAs, meme coins, like all depends. For me, if you ask me personally about myself, I'm not a meme coin lover because I believe in the fundamentals of the project, and that's what I like to invest into. I don't like to invest into something which has no core fundamentals behind, because otherwise getting into such kind of things is just like going up and down. It's like a gambling kind of a thing where you don't have any particular thing to rely back on, to hold back something that you can completely believe in and things like that. So those are few things that you actually have to understand and behave accordingly. That is what I feel, and is very, very essential and very, very important before you consider any kind of information. So yeah, so many options in the market are available, and all you need to do is basically pick up something which basically can help you out in terms of achieving your goals. So set a goal for yourself 2 years, 5 years down the line. If you do not wish to trade, which on a day-to-day basis you don't wish to do that, you might just be able to maybe just look into investing for longer time, taking the option of dollar cost averaging. So I keep talking about dollar cost averaging in all my sessions, and you all know that dollar cost averaging, it's an investment strategy where you invest a fixed amount of money at regular intervals, regardless of whether the crypto assets prices are going to go up, down, doesn't matter. Instead of trying to time the market, you buy consistently, weekly, bi-weekly or monthly, where the prices are up or down. So that is what is dollar cost averaging is. So some of you might not have the fundamental analysis skills. Some of you might not have technical analysis skills. Some of you might not be having that patience. Some of you might not be willing to sit in front of the screens watching those charts go up and down and things like that. So in that case, what do? You do nothing but you take advantage of the dollar cost averaging. And dollar cost averaging, you will invest when the prices are low. And I told you how to find out whether the prices are low or not. There are different ways through which we can find out. The first and foremost option is to check on the different time frames whether the price is in oversold territory or not. Once you see that it's in oversold territory, that's where your that means that there is ample selling that has happened, ample selling has happened, which gives you ample opportunity to buy. So that is where your opportunity is. If in case you're still unsure whether you're taking the advantage of the market dip or not, then the next option is, like I told you today, that you can follow this NBT formula, which is the network value to transaction ratio that you can determine and find out whether it's a low NVT or high NVT or a fair moderate NVT. And low NVT is your buying opportunity. So that is what you will look into. And once you find that if it's in the low NVT, that is where your buying opportunity is. And if other than that, if you're still unsure, the 200-day moving average is the next option that you can choose. So next, you can see that the price, if it is above the 200-day moving average, then it is basically overvalued. It is not the right opportunity to buy. Of course, when the price is below 200-day moving average, that's where your buying opportunity is. So now DCA is what I was telling you, that, like, for example, you want to invest $100 of like $100 every week, for example, into Bitcoin. So in week 1, you see that the BTC price was 40,000. So you bought like 0.025 BTC. Okay. Then in the second week, the Bitcoin price went to 35,000. So you bought 0.00286 of Bitcoin. Now in the third week, the Bitcoin price went to $45,000 instead of 35,000, went to 45. It increased actually. So you bought 0.0022 of the Bitcoin. Now in the fourth week, the Bitcoin price went to 38,000. So you again bought 0.00263. So every week, $100 you're investing. At the end of 4 weeks, you've invested $400. Your overall investment will stay at $400, but your average price will be and your average buy price is balanced across highs and lows. So in this case, it will reduce the emotional decision making. It will help you avoid the FOMO and panic buying, and it will smooth out your volatility, and it will automate on most easy to automate on most exchanges like Binance, Coinbase, Kraken, etc. And it's basically ideal for long-term believers in cryptos like BTC or ETH. So how this DCA works best in for you is it works best in volatile markets where price fluctuates frequently. Then for long-term investments or the long-term investors focused on accumulation, not quick profit. So if you are looking for a time horizon, that should be good enough to give you some kind of profits after a certain period of time, say 1 month, 3 months, 6 months down the line, whatever time period you're keeping it, that should be good enough for you. When investing in established cryptos like BTC or ETH, this can also be applied. So I think DCA works best in most of these cases. Now, when will it not work? It will not work in short-term trades or chasing pumps. It will not work. In prolonged bear markets, it can take time to see gains, and if applied to low quality or meme tokens, you're just accumulating bad assets. So it will not work in those cases as well. So avoid taking benefit of dollar cost averaging in gains of short-term trades or prolonged bear markets or low quality or meme tokens. Those kind of things you should totally avoid it, because that's not going to work out in those particular scenarios. Now, tools to help the dollar cost averaging is, of course, Binance Auto Invest is one of the options. Coinbase recurring buys is option. Kraken DCA bot is one option. Apps like Zbit, Droplet, Coin Rule, or Cryptos.com recurring buy. These are some of the dollar cost buying tools that can help you in making the right kind of decision. So that is what I can say. At the end of the day, it's totally up to you. It's not something what I say. I'm not a financial advisor. I'm not an investment advisor. So guys, whatever I speak about is all related to the information or the education. None of this is any financial advice. So you have to do your own research in order to get into all of this. So that's what I can say. Last but not the least, and do your own research. So guys, with that, I am going to end the session. I've had enough of talks, enough of gyan today. I think this will be helpful for you guys in order to make the right kind of decisions. So do let me know in the comments. Do let me know what you think about all of this. And if you find any of my video streams, anything useful, please do hit like, subscribe to our channel. We are live on so many channels. We are live on Zbit, X, we are live on Zbit, YouTube. So please make sure that you like, subscribe. And also, now that Zbit is launched officially, you have our Telegram channel, you have our QR code, you have my login link. So all of that can be used to enter into this particular app and start spot trading and futures trading. And if you find it difficult to start your journey, we are there at every step to guide you, to help you, to make sure that you choose the right kind of crypto pair, you choose the right kind of platform. Zbit is the right kind of platform. You can start your trading journey with us, and we can help you, guide you. Our 24/7 customer service team is there to help you, guide you at every step, and to make sure that you get the best out of it. So go today, enter the contest that are going on, enter the campaigns that are going on, and then make sure that you get you get the best of the rewards out there. So please guys, don't miss out on this opportunity. Enter the draw, enter the lucky draw, stand the chance to win free crypto, 5x or 100x your crypto rewards. And then also by reporting the bugs on the application, you can stand the chance to win a free crypto through that as well. So there's so many passive ways of making income at the moment. Even if you don't start your crypto spot trading journey or the futures journey, you still have ample opportunity here to kind of basically make lot of money. So don't miss out on this. I hope to see you tomorrow at the same time between 4 to 8 p.m. So stay tuned until we come back and we talk a lot more things about crypto and its world.